Foreign Exchange Management Act. Please try to understand the terms over here. It's about foreign exchange and you're going to manage the provisions of these foreign exchange. See, earlier, let us go for a very small intro, okay? Earlier, we had this barter system, right? Okay, what do you mean by barter system? Actually, we have many terms. When we discuss on business, we have many terms. One is sale, one is barter, and one is exchange. Please try to understand. Probably you might be knowing, I'm just trying to recall. When we say sale, money will be involved, which means price consideration will be there, right? When we say exchange, I'm exchanging some goods. I'm giving my old phone and getting a new one. See, probably your old phone may be taken around for some 2,000 rupees or 3,000 rupees. You're going to buy a 20,000 rupees worth mobile, which means you're going to pay 18,000 rupees and give your mobile phone worth 2,000 rupees. So, exchange is something where price and the old goods will be considered. Okay. Whereas if you go for barter, obviously completely goods, not old, it's completely goods, and that will be exchanged with completely goods. So no money will be involved. That's about barter. Actually, I cannot name the country, but this country, okay, let me name it as A, country A, had transactions, had business, had trading with all other nations. At one point of time, this country had everything in hand. Okay, had everything in hand. So, in case it is entering into a business with India, so I'm talking about barter, okay, not talking about sale or exchange. It's entering with a transaction or trade with India. India may be giving rice, and China may be, sorry, A may be giving what some other goods, okay. Likewise, Pakistan may be entering. Likewise, USA may be entering. So there are so many nations entering with A, okay. Just imagine India, China both give rice. Now there is so much flooded with rice in a country. Okay. So what happens here is this country now finds another way where you give me the rice or I will give you something, okay, in turn. So probably I'll give some goods. In return, you give money for that. Because I just stocking up all the rice and is not going to be helpful for me. So instead of stocking up the rice, you give the money where I can use this money and get something from USA, from America. I get something from UK. So this is how it is going. And at last, what happened is this seems to be viable for all the countries because this country, all other countries may not be in need of only one thing which is available in A country or B country. It is available in many countries where I can use the money, which becomes a common way of transacting. Okay, and probably you might be knowing we have this dollar as the main dominating currency. Okay, so now there is no such thing called as barter system. But we are now in a globalized environment. Okay. We are not talking about exchange also. We are completely when we go for globalized, we are completely talking about export and import. So when we talk about export and import, we should be clearly managing the foreign currency. So that's why we have this act called as Foreign Exchange Management Act. Earlier, this is in short called as FEMA. We have this act from this year 1999. Okay. Earlier, we had this act called as FERA. Okay. The difference between is this single one alphabet. Here it is management, but here was regulation. Okay. FERA and FEMA. Earlier it was they will provide the regulation, you just follow. Regulation is nothing but set of procedures, rules and regulations, set of procedures. You follow this one, you follow this one. This is the mode you have to follow. So everything was given. But what happened is it has to be not only regulated, it has to be properly managed also. So that's why we have this act called as FEMA. Okay. See, whenever we talk about an act, we have to go over the history background. So whenever we have any inconsistency or we need to have more clarity about this management act, then we'll go definitely referring Fahrenheit. Okay. Probably we might be getting many amendments, but still we go for referring Fahrenheit. Okay. So I have designed in such a way so that I cover most of the content in a brief angle so that I cannot miss anything because when we go for it's not a theory paper, I just give some gist and okay, we can write it on our own, but we cannot do this here. So I'm trying to give all the brief provisions so that we come to a wider bird's eye view. See, FEMA is not a major topic here for us. We have just like a small thing. If it is company law or other topics, then we have to go in an in-depth angle. Here is what is going on. Okay. So let me go for the introduction. Please remember whenever you talk about an act and if it is happening after 1950, you need to have this constitutional validity. Constitutional validity is something, it's there in the constitution. Yes, we can now take it for assumption. So we have come to this word, you remember, presumption. Okay, it's there in Constitution of India. So from 1950 on, it's applicable means okay, then it's applicable for everybody. You need not go and check whether this is valid or not. So because we have this constitutional validity, we can just carry on. Okay. If you go for referring Constitution of India, we have this Article 246. This says Article 246. This article talks about Parliament's exclusive power. When we say what are the we have two governments, right? One is central government, one is state government. So when we talk about which government has which items power means, we'll be talking about, even though we talk about two governments, we'll talk about three lists. Probably you might be knowing this one. One is union list. Okay, that's applicable completely, or completely central government is taking this power. They usually call this as list one or union list. And second one is the state list or list two. Okay, where state government will be taking the power. And third one is that concurrent list where state government and central government will be both having power. Again, we are not up to decide over there. In that schedule itself, it's clearly mentioned against the items, respective items clearly mentioned who is having the exclusive power. Okay, if it is mentioned as state government, then state government. If it is mentioned as central government, then central government. If nothing is mentioned, deemed to be central government. Okay, central government is a higher official. So, if you follow this Article 226, so Parliament is given exclusive power. Parliament is given exclusive power. Okay, related to the matters enumerated in Schedule 7, Union List. Okay. If you go for referring this union list, there is a list which has entry number 1, entry number 2, and entry number 3, etc. If you refer this entry number 16, this talks about foreign jurisdiction. So if anybody is going away India, out of India, then what are the related currency matters and what are the related foreign exchange we have to worry for? Okay. If we refer this entry 36, this refers to currency, coinage, legal tender, and foreign currencies. For example, let me go like this. If you have one of your relative not in India, so who is working outside India in some foreign country and they are visiting India for some 2 or 3 months. For each and every time when they visit India, they will not exchange the currency for Indian currency. They have some foreign currency in hand. They can hold it. They can hold it for some 2 months or 3 months. Okay, because immediately they're going to return to that place. Even though they are citizen of India, they are not resident of India. They visit India to see their family, so they're not going to stay for a lengthy period because there is a particular period within which you have to return to that place, else your visa will be cancelled. Okay, so you will not have the validity to return. So within that 2 months or 3 months period, you need not exchange the currency. You can hold it as dollars, whether it's Singapore or US or whatever it is. The related nations will have respective provisions you have to follow. Okay. So we have entry 36. This deals with currency, coinage, and legal tender and foreign exchange. We have entry 37 refers to foreign loans. Okay. You may be asking, எங்க மேம் இங்க கடன் வாங்குறதுக்கே இருக்க வேண்டியதா இருக்கு அங்க எங்க மேம் போறது? See, foreign loans is not applicable for one individual, right? We may be talking with respect to companies also. Okay. So when we go for foreign loans, what are the procedures you have to follow and how it is managed? That's discussed in entry 37. And this all falls under union list. Union list is who is the government here, which is the government central. Okay. Then it goes with entry 41. This relates with trade and commerce with foreign currencies related to export and import. And definition of custom frontiers also will be taken. So we may be discussing about cess and domestic tariff areas and other things. Okay. We'll go for importance of management of foreign exchange. Yes, what do you mean by business enterprise? It's a normal term, imports goods from other countries, exports its products to them, makes investment account. Okay, so that's what we'll be importing the goods from other countries, which means we'll be importing the raw materials. Okay, and export its products to them. Probably we have this concept called as make in India, make for the world. Okay, this is the reason concept. Make in India, make for the world. Okay, you bring see here we give you the infra land. Okay, we'll give you the employees. We will give the raw materials first. If the raw materials not available in India, then you get the raw materials from your own place because you may be talking about quality and all. So you bring the raw materials from your place. So make for the world. Okay, you make in India. Okay, we provide everything. The know-how, the tech, all the trade secrets you manage. Okay, now you make for the whole world. which means from here you export to other places. This is what you call as foreign trade policy. This foreign trade policy will be defined each and every 5 years. Sometimes, if it is a need, it will be defined in every year also. We have this something called as foreign trade policy. Okay. So first is a business enterprise will be importing goods from other countries, and they will produce the goods and they will exporting it to them because it's brought from there and will sell it there, and we can make investments abroad also. What do you mean by this is foreign direct investment and foreign portfolio investment, FPI and FDI. We will be just having a bird's eye view on all these concepts. So now let us go for FEMA. Towards FEMA 1999. First time we had a system of exchange control. So when we go for foreign exchange, we need to have a control over that. So we need to have a series of rules, and that was covered under the Defense of India Act 1939 on temporary basis. Okay. See, this is not an act, it's just a rule. Act prevents or rule prevails. Only act prevails. Rules and regulations are supporting the act, how it has to be done, what are the things we have to follow. All of these are provided in rules and regulations. So we need to have a separate act. So that's why we have this act called as FERA in the year 1947. Okay. So the foreign exchange crisis persisted for a long time. So we need to have this act called as FERA Act 1947. Then after 1947, this act was replaced by, see, replacement is different and amendment is different. Probably if you talk about Companies Act, 1956 Act was the earlier one, and we have 2013 Act. So 2013 Act is now replacing the old Act. After 2013 Act, we have so many amendments. So each and every year, probably if you say each and every day, so in our colloquial language, we say, காலையில போய் மேல செக் பண்ணா நோட்டிபிகேஷன் செக் பண்ணா எம்சி வெப்சைட்ல பார்த்தா ஒரு புது அமெண்ட்மெண்ட் வந்திருக்கும். Because how so many changes are taking place. Amendment is different, replacing is different. Here replacement was done. 1947 was the original act, but after that 1973 act came, then 1974 act came, and everything was regulated. We are talking about foreign exchange, right? Everything was regulated for more than 26 years. Okay. Then because of this 1991 LPG concept, so we might be knowing. So if you go for the past from 1950 to 1991, so like 41 years, we are fighting to protect our country from the foreign nations because already we have lost and we have fought so much to bring our control. Okay, so we are fighting so much that we need to become ourselves like independent. Even though we got the independence, we want to have our own economy. Okay, so that's why we are fighting for some 40 plus years. And 1991 was the year where we got this liberalization, privatization, and globalization concept. And because of this, we need to go for economic liberalization and we need to initiate a policy. And that is now we have got for FEMA. Again, you may ask me, well, this is happening 1991, ma'am, and you're talking about 1999. So we need approximately like how many years? 8 plus years of this. Even though we got this all this liberalization concept in 1991, and we were entering into many, see, we have this G20 summit and we have this BRIC nation meeting and all, right? Even though we are entering in this, India was asking for this gestation period. Just give me some 7 or 8 years period because we want to grow. We are so much underdeveloped. Okay, we cannot grow, and we can talk about war, different wars were taking place, and we can talk about poverty, calamities, everything was happening this 41 period, 41 years period. So soon after we got this LPG, we cannot say, okay, we are ready. We are still underdeveloped. So not only India, many nations are asking this gestation period, just give some 6 plus years or 7 plus years, and we want this gestation period. After that, we'll go for that agreement. We'll enter for that agreement. Okay. So from this year 1999, we have this act, and so you know this meaning, right? Repeal, which is repealing. FERA is repeal, and it's replaced with FEMA. Repeal means most of the provisions from FERA will not be followed. This is what we call as repealing. Okay. So we have this act called as FEMA 1999. Okay. Then in the year 1997, so how it formed, okay. In the year 1997, a committee was formed on capital account convertibility. It's constituted by RBI. So it was recommending some changes with respect to the legislative framework regarding the government foreign exchange transactions. Okay. Even though we got this from the year 1991, this foreign exchange management is effective from which date? June 1st, 2000. Okay. Can you go through this? What is the objective and applicability of the Act? We'll just come across three main objectives. First one, we have the foreign exchange reserve. and it has to be properly utilized and conserved. See, if we talk about uh, our background fund and all, we need to have those resources, probably in gold and in foreign exchange, in foreign currency. Second, you're conducting business not in India alone, outside India. If it is in India, you're going to exchange only Indian currency. Okay. So you're going to conduct the business outside India and how the transactions are going to take place. So either from that is export or import. And third one, how you're going to deal. So this is about the procedural aspects and this is about dealing of the currency. Not only along with dealing, you go for making investments abroad. See, we deal three angles. One is import. Okay, what do you mean by import? See, just imagine or just think, definitely you know, in what way foreign exchange, foreign currency will be involved. You are buying some goods, maybe foreign goods in India. No currency is involved, foreign currency is involved. But instead, you directly buy from them, you import. So foreign exchange is involved, okay? Foreign currency. Second, you export. You're going to receive the foreign currency. So second, okay. Third, you're going to make investments. Foreign currency will involve. So making investments abroad or invested in India. So both will, okay. So you have to discuss in three angles. So whenever you think about foreign exchange, you have to think not only import and export, along with the investments, you have to go in three angles. Is it okay? So we'll go for the definition. Foreign exchange means foreign currency and includes deposits, credits, and balances, which is payable in any foreign currency apart from Indian currency. You see, it's very simple. If it is Indian currency, you're not going to worry at all. If it is foreign currency only, we're going to talk about Shaka. Okay, just imagine there is one person who wants to invest in India. So this is India. Okay, he may be an Indian citizen, but he's settled in foreign now. He's not resident of India, but he's citizen of India, non-resident and citizen of India. So he wants to invest his business in India. He has his account, what you call as this non-resident foreign account, non-resident foreign currency account. Okay, we call this as NRFC account, non-resident foreign currency account. He will not directly bring the investment in India's business. What he'll do is he has one account over here, right? The bank, almost all the banks have. He will be transferring the foreign currency here, and from here, the business will get as Indian currency. Okay. You may be saying this is investment, but we will be following foreign management, foreign exchange management act, but will not exactly say this is a foreign currency. Okay. So all these things are provided over here. So what do you mean by foreign exchange? Foreign currency? It includes deposits, credits, balances. What are the things? If it is payable in foreign currency, it will be included. And not only that, including drafts, traveler's check. So nowadays, if you're going for a foreign trip, you're not going to carry the cash. Instead, what they'll do is they'll give some debit card, right? Okay, where you can convert instead of holding in currencies, foreign currency, you can have it as a card. Wherever you go there, you can just use the card and use it. Okay, but that should be linked to your savings account. So that will be linked to your savings account. You'll be given a card like so letter of credit or bills of exchange expressed. Okay, please make a note. Expressed or drawn in Indian currency, but payable in foreign currency. Please try to understand. Here, the first definition. Okay, let me clean the board. Here, the first definition says when we talk about deposits, credits, and balances, these are payable in any foreign currency. Obviously, the second related definition, and after that, and is also payable in any foreign currency, but it should be expressed in Indian currency. I'm going to take 1 lakh to Singapore. Okay. So that may be represented in Singapore dollars, that traveler's check or whatever it is. But it should be given as what? Indian currency. Okay. So see, we'll be coming across many definitions. Please try to understand. In most of the cases, we'll be talking about this foreign currency. Okay. It's very rarely that we use this express or drawn in Indian currency. So this is about the very first definition. Highlights of FEMA. Yes, we have to have transparency in rules and regulations, and it should be easy to assess and understandable also. That's why. Then we go for the scope of the act. Applicability extends to the whole of India. Please try to highlight. This one I place a star mark. Applies to all branches, offices, and agencies outside India. Not only that, owned now controlled by person resident in India. PRIL. I have given a short form. Don't write it in exam as short form. Person resident in India. Person resident in India. Okay. He is a person resident in India. Whom do you call as resident? What do you call as residency status? More than 180 days if he stays in India, if you call as a resident in India. Okay. Whom do you call as person? Not individual alone. We'll be talking about other business also. Okay, so when we talk about person resident in India, this business or this person has his branch or any offices or any agencies outside India, then for those branches, those offices, those agencies also is applicable. See, we're not talking about geographical jurisdiction, we are talking about legal jurisdiction. Okay, so you need to understand if it is in India, then it's applicable. If I am in India, I'm transacting any foreign exchange, then it's applicable for me. But if there are any branches of foreign offices or agencies outside India, it's applicable for them also, even though they are not in geographical jurisdiction. Okay. And if any contravention, please try to highlight this one also. If there is any contravention committed outside India by any person to whom this act is applicable, then that has to be considered. So when we talk about the penal provisions, penalty provisions, to whom it is applicable, you, what do you do? If any penalty is given, what do? You go and check the act. Whether this act is applicable. If this act is applicable to me, then this penal provision is applicable. I am liable to pay the penalty. Okay, what this act says is, these are the status where it's applicable. One is with respect to geographical jurisdiction, applicable to the whole of India. Second one is with respect to who are the persons involved in the uh, under which scope it is. Okay, apart from this, if there is any contravention committed outside India by any of these persons, then obviously the penal provision will be applied. Okay. Non-applicability. Citizens of India are not applicable who are outside India unless they are resident of India. Which means what? They should be citizen of India and also they need to have residential capacity. Both the things should be there. So you can make a note, citizen plus residential capacity. Okay. So what is the role of RBI? See, whenever any foreign currency, not only foreign currency, any money is involved, RBI plays a role. So completely RBI is playing an administrative role. Not only that, it is laying down rules, regulation and other norms also. And please remember, whenever we talk about money or transaction related, it's not only RBI, it's RBI working for the central government. So whatever it is, we'll consult with central government. Okay. So when we talk about FEMA, it's actually an economic legislation and it's a civil law. Okay, what do you mean by civil law? It's happening between the two parties. Even though we talk about penalty, we talk about imprisonment, we talk about fine and whatever it is, it's actually a civil law. Okay, because it's not applicable for all. See, if you go for this definition, this table, applicable, it extends to the whole of India. It's applicable to you. I'm asking whether this is applicable to you. Okay, let me ask my own self. Is this applicable to me? Will you say yes or will you say no? See, it clearly says what it says. It's applicable to the whole of India, right? I'm in India, proper India. Okay, it's applicable to me. Okay, but I'm not involving any foreign currency in my transaction. Okay, anybody paying in foreign currency to Sahasri Singar Academy? Then how can you say it's applicable to me? Yes or no? You cannot exactly say completely yes or completely no. Because you are in India, this act is applicable, but when it's applicable, the period or the time, only when there is a foreign currency involved, it will be applicable for you. It will not be applicable. See, even the SSA is doing business. If foreign currency is involved, then we'll worry. I am providing a service as a company secretary or for as a CMA to a person outside India. Okay, to a person outside India. He is paying in dollars to me. Okay, then the act will be applicable. I'm providing my professional service not for a person outside India or maybe a person outside India, but I'm receiving as Indian currency because he has a NR not as in foreign currency. So in that case, is this applicable? I'm receiving in my account. I'm receiving as Indian currency, not applicable for me, but for him, it is applicable. Okay, so see, slightly it matters whether it's applicable or not. It differs. That's why we say it's a civil law. So what do you mean by civil law? Stay, but you have to check whether it's applicable or not. Okay. So apart from this, even though we say it's a civil law, but when there comes a punishment, then arrest will be there. So imprisonment and non-monetary punishment is also there in some extreme cases. Okay. Then we'll go for the broad structure of the FEMA Act. This is often repeated question. Overall structure, if we say, we'll talk about the legislation, the original act, along with the rules and regulations we have. If you go for the major act, the supreme legislation consists of 7 chapters divided into 49 sections. Chapter 1 usually deals with preliminary, okay, the basics. So section 1 and section 2 is covered under preliminary. Chapter 2 deals with the foreign exchange regulation and also management. Even though the title says foreign exchange management act, we are dealing with the regulation also. Okay, because it's falling from around. So not only regulation, also management. So both regulation and management. So dealt from 3 to 9. If you are involved in any foreign exchange transaction, you cannot directly involve. There should be an intermediary in between. So that intermediary, we'll call it as authorized person. Okay. So this is covered under chapter 3, follows from section number 10 to 12. So we have 3 sections under this. And if you're not following the provisions of the act, then there's a contravention of the provision, then penalty will be levied. So follow from chapter 4, covers section 13 to 15. You can go for adjudication. Adjudication means what? Filing a case. Then you can go for further appeal. So this is following from chapter 5, section 16 to 35. There's a Directorate of Enforcement, DOE, or you might have heard this name as ED, Enforcement Directorate. Enforcement Directorate is the same as Directorate of Enforcement. If there is any raid going on for any, not only for tax, for laundering and all, definitely we'll refer this on. Prevention of Money Laundering Act is somewhat closely connected with FEMA. Because whenever we talk about foreign currency, yes, prevention of money laundering, both equal. But it's a highlight for prevention of money laundering. When we say FEMA, it's applicable to the whole of India and other branches and offices and all. But when we say prevention of money laundering, it's applicable not only the whole of India, whole globalized. Okay. IT Act and prevention of money laundering is, even though we follow our Indian law, it's for the whole of the world. Okay. Then this is chapter 6, covering 36 to 38. And the last chapter is the miscellaneous provisions, 39 to 48. Okay. Shall I take over? So this is the supreme legislation. And apart from this, we have some delegated legislation. We have some 5 sets of rules, which is made by the ministry under section 46 of the FEB. Is it okay? So this is covered under the chapter 7. Apart from this, we have subordinate legislation. Since we have so much, we have the main act, which is a supreme legislation. For the set of rules, we are following section 46. This is called as delegated legislation. Delegated means what? The proper authority is given. Okay. And apart from this, we have subordinate legislation is consisting of 23 set of regulations. So, supreme legislation, rules, regulation. This is covered under section 47 of the FEMA Act. Apart from this, then and there will be receiving the master circulation directions, which will be reserved, which will be issued by Reserve Bank of India every year. Okay, every year. And we have this foreign direct investment policy, which is introduced by DIPP from time to time. Apart from this, we'll be following some notifications and orders issued by RBI, and we have the enforcement directorate of enforcement or enforcement. All these and these regulations, rules, and all will be issued along with the main act. So they are understandable and they are available under the public domain. If you want, you can just go and refer FEMA Act under the public domain to get the rules, regulations, and policies and all FDI investment policies. We'll go for benefits of that. Actually, we are not directly dealing with the benefit because when we talk about FEMA, we cannot say FERA is different and FEMA is different. So we are making in a comparison angle. So when we talk about FEMA, it was actually regulating, okay, so relating to foreign exchange, whatever is specified. But here, everything what is explicitly covered, not controlled. So if anything is mentioned, it's not controlled. Apart from that, everything is covered. Okay, if it's mentioned is not controlled, then that all is not covered. So which means by default, everything is covered over here. And here is regulating and minimizing the dealings of foreign exchange and foreign securities, whereas it aims for liberal foreign exchange market. Because this concept is arrived after LPG only. Liberalization, privatization, and globalization. And obviously, when we go for the liberalization regime, we'll discuss on increase in foreign exchange reserves, more flow of foreign exchange was involved. All is there. Okay, it's not just comparison, direct comparison table. Okay. So actually, we need to understand the difference in terminology. One is FERA, our regulation, and now it is not FERA alone. It's along with FERA, that is along with regulation. We are talking about management also. Okay, so government towards deregulation of foreign currency and promotion of free flow of international. Deregulation is nothing but liberalization. Okay, deregulation is like, see, if you have too much of regulation, then I'll be thinking, why I need to go for globalized business? Let me do it in India itself. So I may not be expanding my business. Okay, so in that way it happens. And Section 7, it discusses on removal of restrictions on withdrawal of foreign exchange. We'll be dealing with these two. Along with this, we'll come across, see, one is current account, okay, and one is capital account. One is direct route, okay, one is government, need not get any permission. All the rules and regulations are there. You just follow the rules and regulations and you just give your statement that you have that you're doing all this. Okay, it's like self-assessment. Like if you go for the government route, you have to get some permission from the government, then only can proceed further. Then only can do the actions further. Direct route is another name called as automatic route, which means automatically you can do it. Government route is automatic route is you can do it, then permission to the government. But then after receiving the permission, you can proceed. Okay. So we'll come across two concepts. One is capital account transaction, current account transaction, and one is automatic route and another one is government. Okay. So when we say about this section 5, current account transactions are something involved with the day-to-day business and trade. Okay. So for this one, if you have too much of restrictions, then the economy will not be growing because this legislation is an economic legislation. Okay. So you need to improve the business means you need to improve your economy means definitely you have to work on withdrawing the restrictions on foreign exchange. Okay. Which means withdrawing or removal of restriction means what? You need not seek RBI permission related to exports and imports on current account, not on capital account, on current account. So current account means deemed permission will be given unless express. Along with the provisions, it says anything that you have to get the permission. If it is not saying anything, you can just take over as it is. Okay. So you can just follow with the business. If it is a capital account transaction, you have to get the permission first, then exit. Okay. What's the difference between the title FERA and FEMA? Okay, so we have discussed this. FERA is regarding the regulation. So FERA was discussing on criminal law, but civil law is the FEMA one. So when we say FEMA, it discusses all the provisions, all the regulations, everything, and what are the procedures you have to follow. If you want to do this one, what procedures you have to follow, which authority you have to go and which everything is done. Okay. But what FERA did was, if you do any contravention, we'll arrest you. We'll give you imprisonment. See, we don't know what to do and how to do. And directly you say if you're not following this, if you're contravening, then we'll make an arrest. Means it's not reasonable. First, let us understand the procedure. Then we'll proceed. Even though you're not following properly, then if it's a contravening provision, then we'll go for penalty. Arrest of arrest. So generally we call this as civil law. Okay. So here it's called as deemed guilty. They are not checked whether you have done wrong or something. If you're not following the provisions, contravention, then you're guilty. You're accused. So accused has to defend himself. He has to prove that he is not doing in a right way. Sorry, he's doing in a right way. Okay. Actually, very strong provisions now. But this will not be helpful. So we need to relax. And see, this third point is a very, very beautiful point. Onus remains on enforcement directly. What do you mean by onus? Burden of proof. Onus means burden. Onus of proving. Burden of proving. So once something is found wrong, the accused, see, we will not use the term as accused. The enforcement directorate has to prove that he is the accused. He has done wrong. So the burden of proof is not with the business or not with the person involved with whom all the directorate was. So he has to collect all the documents, all the related witnesses, evidences. He has to prove he has done wrong. So till then, I'm not making myself guilty. So it's a beautiful provision actually. Okay, can you please go some important definitions? Not all. Whom do we call as authorized dealer? A person authorized as an authorized dealer under Section 10, subsection 1. So the definition is very simple. Go and refer Section 10. He has to follow all the conditions. If that respective person follows all the conditions, that person will be called as an authorized dealer. Our definition here deals with Section 2, Clause C. Deals on who is the authorized person. Okay. Because of this definition, I have to refer to the authorized dealer. Who are the authorized person? It's a listing definition. What do you mean by listing definition? It's not actually defining. It's giving these are the persons who are called as authorized persons. Okay. So if he's an authorized dealer, he'll be called as an authorized person. A money changer, offshore banking unit. Okay, so there may be some some branches of India not here over there, or we'll be having the branches in special economic zone. Special economic zone, even though it's covered under geographical jurisdiction of India, when we go for trade purpose, that will not be called as India. You probably might be knowing. So we'll be calling these two terms. One is special economic zone, and one is called as DTA. The banks in special economic zone will be called as offshore banking. Okay. Even though geographically they are in India, will not consider that the trade happening there is happening in India. Okay. The reason is from here, if you export any goods, export of goods or services, you will not have the particular customs duty and all. You will have, but there will be some relaxations. Okay. So the term is a special economic zone. That's why economic purpose. Or any other person being authorized under section 10, subsection E. 1. For what purpose? To deal in foreign exchange of foreign securities by an Indian company in accordance to the provisions of the Companies Act as legal. Okay, so we are not only following FEMA here, we are following Companies Act also. So any authorized person who is dealing with foreign currency or foreign exchange, the foreign currency is foreign exchange, right? Okay, so for foreign securities, which company? Foreign securities by which company? When you talk about security, we are talking about Indian company securities. Okay. In accordance with the provisions of the Companies Act. So when you talk about shares and stocks and debentures, you have to go for referring Companies Act. Companies Act, SEBI and other things and all. See, when you go for issuing shares to the person outside India, foreign investor, you cannot directly follow Companies Act alone. Companies Act says go and refer SEBI because a listed company alone can do it. Or you have to go for applying for list. Then only can proceed. Okay. Shall I go for the next definition? C and D, we have to understand together. Capital account transaction is, see, you know the financial statements. It contains balance sheet. Okay, it contains profit and loss account. Apart from that, you have cash flow statement, no stock. Leave off all these things. I'm just discussing on all these two only. If you buy an asset, okay, then you make the changes in the balance sheet. If you do some trading, where to make the changes? Profit and loss account. So what are the changes? See, any transaction that makes the changes in profit and loss account is nothing what you call as current account transaction. If any changes makes any changes in that is any buying or selling makes any changes in balance sheet, which means it's altering a asset or altering a liability, then it's nothing but capital account transaction. Is it okay? So you follow from section 2 clause E and section 2 clause J. Here we say a transaction which alters the assets or liabilities, including, please highlight, including contingent liabilities happening outside India. See, we are talking about foreign exchange and other things, right? So it's happening where? Not in India, happening outside India for the person resident, sorry, for person resident in India or person outside India. Okay. Includes the transactions which is specified in section 3, section 3, section 6, subsection 3. When you go for current account transaction, see the definition is a very simple definition. See, a transaction other than a capital account transaction. So you first check to check whether this is current account or capital account. First, go and check this definition whether it's capital account. If it's not capital account, then it's going to be a current account transaction. Okay. We can't prejudice the generality of the foregoing. Such transaction includes without prejudice means there may be some law saying that you have to follow this as current account because in accounting standards we'll be dealing with that in a separate way. In fact, we talk about depreciation. Okay, the asset might be brought, but any foreign currency is involved. No, when you talk about depreciation, it's a non-monetary item. So you have to deal in a different way. So that's what we say stop prejudice. So generality of the foregoing transactions. Okay. So such transactions may be any payments. See, it's all related to trade. Any payments due in connection with foreign trade or any other current business or any services. Not only that, long-term banking and credit facilities, everything, all this happening in ordinary course of business. Please try to understand. All these are happening. See, what is your business? All these transactions are happening in your ordinary course of business. Then consider this as well. You will show them profit and loss. Okay. Third, You limit some amount for living expenses of parents, okay, or spouse or children residing abroad. Remittance, you can say in two angles, one is inward and one is outward. So you have your parents, you have your spouse and children residing abroad, not in India, and you have to send some money for the living expenses. And this remittances, this sending is what you call as the remittances. It's also called as will be covered under current account transfer. And fourth one, expenses in connection with foreign travel, education, and medical care of parents, spouse, children, all be covered under current account taxation. See, you're going for a foreign travel. You're not going to completely reside over there. You will come back for some business travel or something like that. You're going for education purpose. So, see, probably after the education, you may get settled over there. That's different. But now you're going for that visa itself will be called as education visa. Okay. Or you're going, or you're sending some money, or you're spending some money for medical care of parents, spouse, or children. Some particular treatment you have to go for the nation, then only you can get the treatment properly. Means you're moving over there. So in that case, you'll be calling as expenses only. All these are covered under current account transaction. You treat this as current account transaction. Okay. But before checking whether this is current account or capital account, you have to check with the definition of capital account. If it is not covering under the definition of capital account, then you have to come over. Okay. So these are the two very important definitions. So probably we'll take a break and continue with the rest. So next definition, foreign currency convertible bond. Okay. It will be subscribed by a non-resident entity in foreign currency. He's not a resident entity. It's a non-resident entity in foreign currency, and it will be converted to ordinary shares of the issuing company in any manner. You may feel like as if I'm reading the things what is given. Do you know about this deposit receipt mechanism? DIAS, GDIAS, IDIAS. Okay, probably I'll go for a short, fast recall. India. Okay, all of that I'm drawing. Okay. A company in India, so which is a Indian company. It can issue shares to the persons of India. Okay, there is no restrictions. You go and follow their laws. For example, if you go for a partnership firm, partners cannot buy the shares in their firm's name. They will buy in their own name. Okay, but instead, if it is a Section 8 company, the firm's name will be called as the shareholder member. So there are so many separate laws, so we go and follow those respect. When there is a foreign investor, which means what? He's not an Indian, okay? He's not belonging to Indian nation and other things about. He wants to buy shares to from Indian company. Okay. What FEMA and FDI policy says here is the foreign investor will be paying the money. Okay, definitely it will not come directly to company. It is through an authorized person only it comes. Okay. So definitely company is receiving the capital from this person. In turn, what company has to do? It has to give shares, right? But company will not directly give the shares to foreign investor. The company will be issuing the shares in the name of the foreign investor to a person called as a custodian bank. It's a bank, okay? It's a bank. It's called as a custodian bank. I'll just give the name why it's called as custodian later. This custodian bank, see, I'm just placing this custodian bank in my map. So, which means the custodian bank is in India. This custodian bank will have a agreement with the bank in that foreign nation. So probably this is a foreign country. Here will be a bank called as a depository bank. Okay. Okay. Depository bank. The concept here is this depository bank will give the receipt to what? To the foreign investor. This receipt is what you call as the depository receipt. Okay, we call it as DS. This is what you call as the depository receipts. What is actually happening? See, first what happened? They'll go for issuing the prospectus, etc., etc. Then they'll get the receipt, they'll get the capital inside, application money, etc. Okay. Once the money is received, then this is the second move. The shares will not be directly issued to the foreign investor. Instead, it will be deposited in the bank which is in India, and this bank will keep the custody of the shares. That's why it's called as custodian bank. So this bank is taking the custody of the shares on behalf of whom? Not foreign investor. On behalf of depository bank of their country. Okay. They have this agreement. I said, right? They have this agreement. The agreement between these two banks, custodian bank in India and the depository bank in foreign, is that custodian bank will say, I have received the shares. Okay. So he will send the message to depository bank, I have received the shares. This depository bank, in turn, what it does, gives the receipts. What do you mean by receipt? See, it's an acknowledgement, right? So this receipt will be given with a foreign investor. This person is called as a depository bank. See, when you use the term deposit, depository, deposit, which means a depositing. So, Indian company has to deposit to whom? Depository bank. But they have this agreement instead of depositing the deposit, because depository bank again is foreign, not in India. So instead of depositing over there, on behalf of depository bank, custodian bank is now working as the agent, where custodian bank will take the custody of the shares. It's a very different and beautiful concept, and you have to understand because whenever you talk about shares, so whenever you go in future, whenever you go for an audit or something like that, if there are foreign investors involved, you have to check whether there is a proper contract with the other things as well. Okay, so there is no provision to directly provide shares to the foreign investor. Okay, so so this is the angle part. So it starts from here, foreign investor, then to the company, then goes over here, custodian bank. Then custodian bank will give the message that I have received the shares. You give the receipts, and this bank will be issuing the receipts. The foreign investor will never hold shares in his hand. He will receive the receipt from you. And this receipt is called as a deposit receipt. As per the foreign investor, who's holding the deposit receipt? Depository bank is holding the deposit receipt. But depository bank is not holding the shares. Instead, custodian bank in India is holding the shares. Okay. So we have some, this is a normal concept. It's called as GDRs in general, global deposit receipts. If America is involved, we'll call it as ADRs. If India is involved, IDRs, and so on. Okay. So if you want to make a note of anything, you can please else I shall go for the next content. See now understand. So when we talk about this foreign currency convertible bonds, we are linking this with a scheme called as foreign currency convertible bonds. See, bond may be associated with shares also. So that's why we are linking this scheme, foreign currency convertible bonds and ordinary shares. But when we talk about shares, if you are issuing this to an Indian, then we'll talk about ordinary shares. But these shares are issued through deposit receipt mechanism. That's why the scheme is particularly developed under FEMA Act. Okay. Who's subscribing this? Definitely not an Indian. By a non-resident entity, he is subscribing in foreign currency. If he is subscribing in Indian currency, means then we'll not talk about FEMA. If I can understand. Foreign currency is involved, we have to be very careful. And it will be convertible into ordinary shares of the receiving company, probably either in full or in part or whatever. Then shall I continue? Then we'll go for the next definition. Foreign direct investment, FDI. It's nothing but investment. Who's investing? Non-resident entity or person resident outside India. See, this scheme was related to non-resident entity alone. Here it is non-resident entity or person resident outside India. Prill also. In the capital of an Indian company under Schedule 1 of the Foreign Exchange Management Act, transfer or issue of security by a person resident outside India regulations. So it has number of regulations. So one among the regulation is Foreign Exchange Management Act transfer or issue of security by a person resident outside India regulation. Okay. In that regulation, we have under Schedule 1 and based on the Schedule 1, we have this definition FDI. So whenever it happens, you have to sometimes go in the reverse order. So let me go this way now. Not only here, most of the content you have to go in reverse order only. Then you'll understand it differently. So there is a regulation, right? What regulation is this? So this is the regulation. Okay. This regulation has a schedule 1. Okay. As per the schedule 1, if the Indian company is issuing shares, which means what? The person outside India, that is non-resident entity or person resident outside India, is making investment where? In the capital of the Indian company means then we call it as FDI. What do you mean by capital? Equity difference. Okay, or obviously debt capital. So general in capital. So this is about FDI. Note is not defined here, but in the consolidated FDI policy circular of DIPP, Government of India, it's particularly defined. Okay, so that's why you can find that FDI doesn't have the section number. I don't know how far you know this. If there is no section number, means it's not defined in this act. We have somewhere else. Then the investor directly invests in shares and convertible debentures. See, even though it's debt capital, it will be later converted to shares. Okay, so convertible debentures in the company, not through intermediary. Please highlight, not through intermediary. So there will not be an authorized person. So let me go for next definition. Actually, we have seen this definition. Remember what do you mean by foreign exchange? So I'm not going line by line. Okay. We'll be coming across this term called as FIPB. There is no FIPB now. Okay. Everything is under the control of Foreign Directorate only. That is Enforcement Directorate only. So FIPB stands for Foreign Investment Promotion Board. Is constituted by Government of India. Stands abolished from May 2017. So after that, many things have changed, but this is being referred because till 2017, see, 2017 is not at all one decade. So still that period, we were following from this FIPB only. Then we came across this enforcement directive, but still we are referring this because any inconsistency is there. We have to get the clarification from those board. Okay, so you cannot say just it is no more like that. Okay. Then we'll come across foreign institutional investor. So foreign institutional investor, any entity, okay, an entity we say institutional investor, in short, we call it as FII, is not an individual. So it's going to be an entity, foreign institutional, right? So it's not Indian. So established or incorporated outside India. It proposes to make investment in India and is registered as FII as per our regulations, SEBI regulations. SEBI has its own right, own authority to make different regulations, and one such regulation was made on foreign institution investor. So, if that foreign company, foreign entity is registering under this regulation, then that company is eligible to go for foreign institution investor. Then we go for foreign portfolio investor. So, a person registered under the FPI regulation. So, it's simple. Foreign venture capital investor, yes, again we have the regulation, SEBI Foreign Venture Capital Investor regulation. So, investor incorporated and established outside India proposes to make investment in accordance with these regulations. That's it. It's all direct definition. Yes, please make a note of this definition. Foreign security. Foreign security covers from clause O of section 2 any security in the form of shares it may be. So security is a wider term, right? In the form of stocks it can be, in the form of bonds or debentures or any other instrument. Okay. See, when you say the term any other, don't take it as any other. Okay. There are some expressions denoted here. Okay. And those any other instrument should be denominated not only all shares and other things, it should be denominated and expressed in foreign currency, includes securities expressed in foreign currency, but please highlight by redemption or any form of return, such interest or dividends is payable in Indian currency is please highlight. Okay. Dividends on interest. If it is a bond or if it is a debenture, we'll talk about interest. If it is a share or stock, we'll talk about dividend. Okay. So whatever the instrument is, depending on this instrument's nature, we'll talk about interest or dividend. It will be payable Indian currency. Okay. Investment on repatriable basis. So repatriable basis means we have some sale process over there, and those sales profits are invested here in this company. So investment, the sale process of which net of taxes you have to consider are eligible to be repatriated out of India. You can take it outside India because you are investing here. If it is not possible to take that money outside India, then what's the point of investment? So that's what we call as repatriation. I am eligible to be repatriated outside India, out of India, and the expression shall be construed accordingly. So you just go as per the law. Then important definition, person of Indian origin, PIO, a citizen. He can be of any country, but not Bangladesh and Pakistan. So this follows from Partition of India Act 1947, when we went for this Indian independence and constitution, and also we had this conflicts. You cannot exactly say conflicts. We have this understanding with Bangladesh and Pakistan. So any a citizen of any country not belonging to Bangladesh or Pakistan, if he at any time, please highlight any time, held Indian passport or first condition or means what? Any of the following. He or either of his parents or any of his grandparents was a citizen of India by virtue of the Constitution of India or the Citizenship Act 1955. பூர்வீக India. அப்படி சொல்றோம்ல. So the same like. Or so this is related to the parents and grandparents. And third point, the person is the spouse of an Indian citizen or person referred in clause 1 of. Okay. So this case you call as person of Indian origin. Next is person resident in India. So probably you might guess this. A person residing in India for more than 182 days during the course of the preceding financial year will be considered. Please understand preceding financial year. Okay. You should not go for calendar year. You have to go for financial year. But these are not included. These persons are not included. First one. A person who has gone out of India, who stays outside India, in either case, for what purpose? For taking up employment outside India. Okay. Or he's carrying on some business outside India or some occupation or something outside India. Or for any other purpose in such circumstances as to indicate his intention to stay outside India, but there is no certainty of the period for how many months he will be staying there. So they will not be covered. So this is with respect to first one. This first point is our focus on the person out of India. Now go for the second point where the focus is the same thing, but the person stays in India. Okay. The person stays in India either for employment sake. See, he's staying for 182 days. He stays in India. Will you call that person as person resident in India? No. So he's taking up employment in India or some business or some vocation purpose he has come over here, or he staying here in India for some uncertain period. Okay. So this is the first point. Now second point. See, this is follows from section 2 clause I. Under this is the first point. Under this first point, there are 2 points. Under this first point, ABC, and under the second point, ABC. So this is how it goes, okay? Okay. So this is all falling under the very first point. Then second, third, and fourth. So if you go for the barrage, it will look like this. Section 2, clause I. Okay. Roman letter 1, small Roman letter 1, small Roman letter 2, small Roman letter 3, and small Roman letter 4. Under small Roman letter 1, 1. Then 2. Under this you'll have A, B, C. Under this you'll have A, B, C. Is it okay? Now we are here in the second point. Any person or body corporate registered or incorporated in India will be called as prill. An office, branch or agency in India owned or controlled by a person resident outside India also will be called as prill. Please highlight. Even though controlled or owned by a person resident outside India, but it's an office or branch or in India. So we take the definition like similar to foreign company. Okay. And an office, branch or agency outside India owned and controlled by a person resident in India. See, who's taking the ownership? Not only that matters, where it is located in India. That also matters. Can you please go through this definition in this and please? Other definitions, whom we call as authorized bank, it's a bank, it includes a cooperative bank also. We are not considering actually authorized dealer over here. So the bank or the cooperative bank will be authorized by RBI. Okay. He may be an authorized dealer, money changer of offshore banking unit. Other authorized person follows from section 10, subsection 1 to deal in foreign exchange or foreign securities. Capital, yes, will take care of equity shares, preference shares. That preference share should be fully compulsory and mandatory convertible. Please highlight. We are not talking about different types of preference shares. What is the nature of preference share should be? It should be fully convertible to equity shares. It is compulsorily convertible and mandatorily convertible to equity shares. And what about the debentures? Same like fully compulsory and mandatorily convertible to shares. Okay, and warrants. All these will be covered under capital. Then equity share includes partly paid up shares also. Preference shares and convertible should be fully paid up and should be mandatory and fully convertible. Warrant includes share warrant issued by the Indian government. And we have gone with the definition of deposit receipt. So just let me go for the ticking mark. Okay, it's a negotiable instrument security issued outside India. See, it's not the share receipt, right? It's the negotiable security, which means that because of the terms and agreements, we have issued this one. Which company? The Indian company to the custodian bank. The custodian bank is taking over the custody, and the deposit receipts are issued by the foreign bank. Okay, just have this mapping. Okay, then, so buy a depository bank on behalf of the Indian company, which represents the local rupee denominated equity shares of the company, held as a deposit by the custodian bank in India. So just try to imagine that bank and put it in words. Okay, this will do. In other words, I'm not going line by line. You can manage. DRs are traded on stock exchange in the US. These companies or these nations and all. ADRs are listed and traded in US markets, America. Okay, so American depository receipts. So in US markets, GDRs in other places. Okay, if it is traded in India, we'll call it as Indian depository receipts. So it's governed by the notification of FEMA issued by RBI. Let me go for the next definition. See, it's all basic things. Okay, that's why I'm just taking over the speed. Export follows from section L. Grammatical variations and cognitive expressions, which means what do you mean by export? Taking out of India. That's the general meaning. So that's what they say, grammatical variations and cognate expressions. Okay. Means the taking out of India to a place outside India, any goods. Okay. Provision of services from India to any person outside India. So it's not only applicable for goods, it's applicable for services. Then foreign currency, yes, we already know any currency other than the foreign currency. Government route, so we have two routes, right? One is government route, one is automatic route. We are talking about government route. So if you want to invest in the capital of resident entities where the non-resident entity is trying, it should be made only with the approval of the government rule, and this is done by through the promotion of industry and international trade under the Ministry of Commerce and okay. Import, we know grammatical variations and cognate expression means bringing into India any goods or services. Indian currency which is expressed or drawn in Indian rupees. Okay. Does not include, please highlight, does not include special bank notes or special 1 rupee notes issued under section 28A RBI Act. Please highlight this one, these 2 points. Shall I take over? Non-resident entity, a person resident outside India as defined under FEMA. Non-resident Indian, yes, please take that. Let me go a bit slow. Who's a non-resident Indian? As we know, NRI, an individual, because we say Indian, an individual resident outside India, okay, who is a citizen of India, he should be a citizen of India. Because he is not residing in India, you cannot call him as NR. He should be an Indian, which means he should be a citizen of India. Okay, citizen of India, or he can be an overseas citizen of India cardholder. So he is having some particular cardholder as per our act. Okay, we have a separate act called a Citizenship Act. If you go for the provisions of the Citizenship Act, it clearly says who are the persons covered under this act. And if you are holding this cardholding called as overseas citizen of India, then it will be considered as NR. Okay. So when you hold this card, persons of Indian origin, then will be automatically called as overseas citizen. So if you have this person of Indian origin card, then will be covered under this. Okay. Let me take over. Another important definition: person follows from clause U of section 2, includes an individual, half, company, firm, association of person, body of individuals, whether they are incorporated or not, every artificial judicial person not falling within any of the preceding subclauses. See, these are the preceding subclauses. Okay. Apart from this, if anybody are there and being an artificial judicial person, considered as that, and any agency, office, or branch overall controlled by such persons. Such persons means what? The above persons. Okay. So till here, definition is done. Just the salient provisions of FEMA Act. Section 3. So section 1 and section 2 is done, right? What is section 1 and section 2 falls under preliminary. So we have done the preliminary part. Section 3 deals with restriction in dealing of foreign currency. See the very first word, it's clearly giving a prohibition, which means prohibited. Unless you do through an authorized dealer, it's fine. If any transaction is happening through an authorized dealer, then it's fine. If you're directly dealing it, then it's prohibited, which means it's a crime. Okay. You may call this as prevention. You will be covered under prevention of money laundering. You will call this as laundering of money. Okay. So, prohibition of the following. See point A. Dealing in or transferring foreign exchange, foreign securities by any person not being an authorized person. Okay, which means what? You are not properly following the laws. B. You make any payment to or for the credit of any person outside India in any manner. C. Not only making payment, the reverse way. Receiving payment, any payment by order on behalf of any person resident outside India in any manner. So receiving without a corresponding inward remittance from any place outside India. Receiving means deemed receiving. Okay. You might have not received it, but deemed receiving includes an authorized person also. D point, entering into any financial transaction, probably a consideration for acquiring an asset or something like that, or creation or transfer of right or something like that. In this case, so you know what you mean by financial transaction. I'm not going line by line. Okay, you can. This is a normal definition. As an account student, you'll be knowing this one. This is about point A. Okay, that's falling from section 3. Next is B, follows from section 4. No prill, which means no person resident in India shall acquire, hold, own, possess, or transfer any foreign exchange, foreign security, or any immovable property outside India, other than those provided under the relevant laws. Okay. So for whom this is applicable? This section 4 is directly dealing with person resident in India. You went for a foreign trip. Your son is there, your daughter is there. You've gone there for 3 months under a tourist visa. You're coming back. Then you're still resident in India because you're staying in India for more than 180 days. So it happens that if you're a person and resident in India, then Section 4 will be completely applicable. See, it's not creating a prohibition, but it's creating a restriction because please follow the rules. If the rules allow you, then you can do it. Please try to understand. You cannot directly go for Section 4 and can say, yes, I'm applicable or I'm falling under the scope. You cannot directly say this. You have to go for referring the rules. If the rule is relevant, the relevant rule says it is okay for you, we fall under this category, then it's fine. Okay. Note, so there is a restriction to April. And when we talk about interest or security related to immovable, we talk about the lease also. Okay. And that lease not exceeding 5 years, it's permissible actually. Okay. If specifically not prohibited. Okay. Requires prior approval. If you're following with immovable property means definitely you need to get the prior approval. Except held by a foreign citizen resident in India. He's a resident in India, but he's a foreign citizen. He owns his property over there in his place, in his native place. And is that prior approval is required? Means no, it's not required because it is his own laws following. So in that case, not required. If it is acquired on or before 8th July 1947, not only acquired, he is holding the property with the permission of RBI. Okay, so for them also this is not applicable. And by way of gift or inheritance from persons referred above or property purchased out of funds held in resident foreign currency. Okay, so I was telling about this non-resident foreign currency account. He's not resident of India. He will be holding the foreign currency. This is resident foreign currency account. I have the RFC in India. Okay, I am a resident of India. I am having the RFC in India, but I don't belong to it. I don't belong because of the employment sake. I might have been here, so I don't belong to India. But I am a resident of India. Okay, see, don't get confused with person of Indian origin and resident of India. It's totally different. Okay, so in this case, if I'm purchasing any property out of the fund which I'm holding in my account, then it's not covered. So that's about section 4. So section 3 and section 4, please take care. It's new to our concept now. Section 5 we have already done now. What is current account transaction? Any person may sell or draw any foreign exchange to or from an authorized person, provided central government in consultation with the RBI on behalf of the public interest imposes such reasonable restrictions. This is about section 5. It's not definition. Please highlight. Already we have discussed the definition. Here we are discussing the related provisions under section 4. The definition is different, this provision is different. Okay, and we go for the schedules. Just a highlight of the schedules related to foreign exchange current account transaction rules. Schedule 1 is about transactions which are completely prohibited. Please highlight completely prohibited. See, lottery earnings, income from raising, riding, purchase of lottery tickets, commission and exports towards equity, commission and exports through rupees state credit route. So everything is prohibited. Schedule 2, subject to the approval of RBI can proceed. See, cultural tools. Okay. Advertisement in foreign print media by a state government or public sector undertakings. Remittance of freight of vessels chartered by a public sector undertaking. Okay. Else payment of ocean freight by a government or public sector undertaking. Else remittance of prize money exceeding $1 lakh for sponsorship of schools. See, all these chess players goes out of India, they play and they get some sponsorships. Okay, and they get a prize money. Okay. I'm not talking about the player's point of view. I'm sponsoring for this. See, $1 lakh not a big matter because if we see in Indian currency, it may look like a big amount. Don't see in Indian currency. See as a dollar. There may be many players coming from different countries. I don't know whether Indian player like Mukesh won the Grandmaster Award and all right. So I'm not talking about the Indian player angle. I'm an Indian entity. Okay, I'm an Indian entity. I'm sponsoring for the sports for what reason? For pricing. I don't know. He will win or another person from any other country will win. Okay. If Indian win, then obviously it's going to be a transaction related to India. But what is happening? It's happening through foreign currency. Okay. So if any other player from any other country wins, is not related to India even, but I'm sponsoring for the sports and the prize money is being given through the sponsorship program. But this remittance of money should be exceeding $1 lakh. Okay. Shall I go for the next one? Schedule 3. You can do it, but there is a scene, upper scene. Okay, maximum, this is the amount you can do. See, foreign travel on private and official trips. You are going for a foreign travel, some for some 10 days or 15 days or 1 month or 3 months or whatever it is. So in that case, you will be given an amount above that you cannot take it. Okay, this is related to upper ceiling. Actually, there is a minimum ceiling also, but here the schedule 3 is about upper ceiling. Okay, more than that you cannot take it. See, the concept of this, if you are going for a foreign travel foreign trip, what you're going to buy over there? You see, the baggage rules of airport, the hand luggages and check-in luggages, only these things are allowed. Okay. If anything you want to ship, you have to ship directly to your nation, directly to your home office. You cannot bring through airways. You can bring through airways, but not along with you. You cannot put it in check-in luggage or hand luggage. So if this is the rules, this amount is enough for me. This is for person to person. If I'm going along with a family and five put together. So it's five into that amount. Okay. Apart from this, your spending excess means, which means it's not safer. You might be involved in some other leaks. Okay. So, foreign travel on private and official, gifts, donations, taking out employment, maintenance of close ladies. Sometimes it happens that we need to maintain our close ladies over there. So, if that is it's over there. And the commission on sale of residential flats, consultancy services, reimbursement of pre incorporation expenses, foreign study, medical treatment abroad, everything has to be considered. So, this is all provided there in schedule. Is it okay? Schedule 2 relates to the government entities. So if you check the schedule 2, we'll be talking about all the details relating to state government, that is not state government, government or public sector undertakings. Okay. So you need to get the approval from the specified department. Foreign exchange today for an is permissible without limit. Okay, so sometimes it happens that if you go through the authorized dealer, then no specific restrictions are there. So you have to go for the compliance with FEMA. So that's enough. Okay. Then we go for capital account transaction. Follows from section 6. Any person may sell or draw foreign exchange to and from an authorized person subject to the provisions of section 6, clause 2. RBI, in consultation with the central government, may specify permissible transactions which transactions fall under capital account transaction, and the admissible limit also will be there. But RBI shall not always impose any restriction on the drawal bank. It depends on, because sometimes it goes for amortization of loans and also how you are going to consider, because it's happening in ordinary course of business. Even though you put this value in the balance sheet, but this happening in the ordinary course of business, so you need not consider this as the capital account transaction. So that's why we say without prejudice, which means you have to consider there and then provisions. Okay. Prill can hold, own, transfer, or invest in foreign currency, foreign security, or any immovable property situated outside India. Okay, if such currency, security, or property was acquired, held, or owned by such person when he was resident outside India. He was not in India. When he owned that money, he was there, not in India, there in that place. During that period, he might have earned, right? So, with the earnings he can buy the foreign currency, foreign security, or immovable. Okay. And foreign exchange, including any income arising therefrom, or conversion or replacement of upload. This is the normal point. RBI, for this purpose, to ensure the full export value of the goods or reduced value of the goods as per the RBI defines, probably it will go for the prevailing market conditions. That's why they are imposing this customs duty and all. There you might have bought the, for example, many go for this Saudi trips where gold jewels will be very better over there. The purity will be good there. But when you go come for the Indian Airways, Indian airport, they will be asked to pay customs duty. Okay, because they need to check this market condition, what is prevailing recently. Okay, and they have to furnish the details and all to the RBI. So here is a case study. Just kindly join with me. Okay, just for idea now. Mr. Goyal, he's a NRI based in London. He has shares. Yes. He decided to sell 5,000 shares of LNT to Mr. Rakesh based at Kolkata. So he is Mr. Goyal. He is at London. Okay, he's an NRI. He is selling the shares. How many? 5,000 shares to Mr. Rakesh. He's at Kolkata, India. Mr. Goyal has a business and imports mica from India on regular basis from a mica mines from Bihar. Okay, so this is his business. Okay, he's in London, but he has a business of mica business where from Bihar. Okay, the payment is made through letter of credit. Within letter of credit falls under foreign currency depreciation within 6 months. So it's a credit period, credit sales, sorry, credit purchase. What kind of transaction are the above transactions and why? Okay, directly I'll go for the solution. Okay, need not think a lot. So transfer of shares. So one is he is transferring the shares to Mr. Rakesh. It's being a capital asset. So it falls under capital account transaction. How do you say this is a capital asset? Because it's altering the balance sheet. Okay, reducing the asset. Okay, so it's a capital account transaction as per the RBI regulation and it's affecting change in the asset position. However, general permission has been given by RBI and there is a relaxation of taking specific approval from RBI. We just directly take it for granted because we have these two rules, automatic and government rule. So far, import from India is concerned, it is a current account transaction related to what? MICA, where the payment has to be made within 12 months. So no specific approval is required. This is the case. So let me go for the next heading. Possession or retention of foreign excess. How much you can possess in your hand. Following from RBI rules, not for all the persons, only for the following persons. There are some limits imposed for whom by a rule. How much this person can possess? Which person? Rule. How much he can possess and retain. Authorized person, yes, they can possess with the limits advised by RBI. Any person may possess foreign coins with no restriction. So you collect this foreign coins, you take it as so your uncle or any person of any of your relative visits India and they give this coin for you. You just keep it for memory and for its sake. Any person may possess foreign coins, not currency. It's they are restricting the term with coins. Okay, with no without any restriction. Any person resident in India can retain in aggregate. Aggregate means what? All the values put together. Foreign currency not exceeding $2,000 or equivalent currency notes or bank notes or traveler's check. So it's not necessary that you're going to hold only in US dollars, right? You may hold it in other equivalent currency also. Okay. April, but he's not a permanent resident. Permitted without limit if the foreign currency was acquired when he was resident outside India and was brought into India and declared. Please highlight. And he has clearly declared to the customs authorities. So my uncle came from Singapore, so he was holding this dollars. Actually, my grandma passed away, so he has to visit. He was staying some. We have this 10 days carry all right. So he was staying particularly for 11 or 12 days only. He was staying. So soon after this rituals, he is going to return. So he need not convert as Indian currency and take it back because he's going to come here, stay here only for a very short period. So when he came from Singapore, he just clearly mentioned he's going to stay for this 12 days period, and he declared to the customs authority, this, which means it's a written declaration, how much of currency is going to hold Singapore dollars in India. Okay. See, Indian currency is having a look wise. Indian currency is having a different look. See, now also if you go for 50 rupees currency note and a 20 rupees currency, it looks like has it painted notes we are using because of the colors. So when we talk about the Singapore dollars, we will not feel it is a currency note. Okay. Yeah. Okay, what we do is if any 10 rupees fall down and we are stamping that 10 rupees, immediately we take it and Kannala people. It is a Singapore dollar. We think that's a fake currency, fake in the sense or duplicate currency, we take it for playing and all. So my uncle was so worried because he has given the declaration that even one single note, there are the different denominations, and one single note misses goes away. Because when he goes inside the airport, he has to go with a paper where he has the permission to hold this for 12 days. He has to show because that currency note is no use in India because he is going to use Indian currency note. So yeah, because of this declaration he has given, he has to produce a paper, the document saying that he was holding this and he's taking all back to all those currency to season. Okay, Idan Tevian. Okay, so let me go. Forms of business may be conducted in foreign company in India. Yes, probably we can incorporate a company under the Companies Act as a joint venture or wholly owned subsidiary. What is this? Wholly owned subsidiary, 100% subsidiary holding. Okay, so you can do this way, or you can set up a liaison office, a representative office, project office, or branch office of the foreign company. So, what do you mean by branch office? What do you mean by branch office? What are the transactions happening in head office? All those will be held in what branch officers. Probably we have this heading in accounts, branch accounts. We have already said it, or you have this. Okay. Under the branch accounts, we'll be having two categories. One is under the control or independently. Okay. What is project office? You are holding some project for some particular period of time and you want to hold an office over there. So that's what is called as project office. A representative office for all the communications to be held by head office. There will be an office which is like an agent. Okay. All the communications will be through the representative office. Liaison office is only for communication office, like an intermediate. So each and every office have a different role span. So project office is different, branch office is different, representative office is different, liaison office is totally different. Okay. So you set up these offices for what? To just undertake the activities what is permitted and you follow from this regulation called as FEMAS, establishment in India of branch office or other place offices. Okay, so this is following under forms of business that can be conducted by foreign company in India. Okay, so that's about FEMA. Actually, it's a small act.